So let's dive deeper into the action with our markets reporters. Abigail, what are you watching?
Well, Caroline, let's keep it super simple and keep looking at the chart I've been looking at on the close, which is the S&P 500 in relation to its 50-day moving average. Because even today, after a huge rally, we are still below that 50-day moving average. That's very fitting relative to the trading action that we've had over the last year and a half. The volatility that we had in the early part of last year that was induced, if you recall, initially by the solar panel tariffs and put on by President Trump against China. Once below that 50-day moving average, really not able to get out of the way, but finding support on the 200-day moving average, the long-term buyers stepping up. Not so much in the fourth quarter, really ugly going below both of those moving averages, all of the buyers really stepping out of the way. Back in May, below that 50-day moving average, and then a test of the 200-day moving average, once again below the 50-day moving average. At this point, Sarah, it looks like we still are probably going to test that 200-day moving average, and you can still make the case that the S&P 500 right now is confirmed for a much bigger drop. So it's going to be very interesting to see what happens with all these macro headlines for stocks, Sarah.
Thanks, Abigail. Well, stocks did surge today, but meanwhile, the yield curve was moving flatter and flatter. If you look at the spread between the 2-year Treasury yield and the 10-year Treasury yield, it is not only the narrowest since 2007. It moved lower today to roughly 2 basis points. At one time, it even dipped below 1 basis point. So right there on the cusp of inversion. Now, what does this mean? Well, Bank of America is saying that technical signs are showing that we could see an inversion very soon. And if that happens, then the S&P 500 is likely on borrowed time, as they called it. As we know, as we've heard many times, the 2s-10s curves, if it inverts, does have a very good record of preceding recessions. However, it's more difficult to tell the time that the S&P 500 or U.S. stocks will peak. In the past, it's been anywhere from 2 months to 2 years out. So only time will tell, but clearly a gauge to keep paying attention to.